Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix with The Street, and together we bring you Morning Call Express. It looks like it's day 3 of a rally, Scott, if I can even call it a third day of a rally. I mean, Tuesday was a very mixed day for stocks. Is this rally actually constructive at this point?
At this point, traders are pulling any hair they have left out because the action has been so poor. We've gapped up every day, and then we've traded sideways, and then you have these midday moves to the downside, and then the next day you gap back up. So we're up 3 days in a row, and the headlines are saying, okay, stocks on a rally, 3 days in a row, da-da-da-da. But meanwhile, there's no money to be made.
And it also seemed like it was very quick on the news that China lowered reserve requirements for all of its banks, but there was nothing really substantial within Europe, say, changing. So I want to go to a chart to see what that resistance level is that we have to overcome to really determine if it is a sea change here.
Okay, so if you take a quick look at the S&P or the spiders, you will see that there's not much action here. Okay, we closed in the dead lows on Friday going into the holiday weekend, and then we've had 3 choppy days to the upside. If you take a closer look, you will see each day you close in the middle of the range, which is hard for traders. As a macro investor, yes, it feels a little bit better that we've rallied 3 days in a row. Today we're opening up near yesterday's highs around 121, but I don't see us getting above 122 to 123 at all, and I know that it seems as if the market is working off its oversold bounce, but I wouldn't get excited and I wouldn't start jumping in, especially if you're holding on to a tier 1.
So do you want to short then? I mean, is that the best strategy, or do you just need to sort of stock pick at this point?
At this point, stock pickers are still getting rewarded. You can still make money as strong stocks continue to hold in there, but it's so selective and it's so hard right now. I'm coming in today short because we failed yesterday at the 50-day moving average, so these futures up are going to be a little bit It's a little bit of a problem for me as well as some other traders out there, as we've seen the low volume. But all in all, I guess this is the new normal.
Would you be covering that, and would that add, say, extra juice to the rally we're seeing early in the futures today?
I'm probably going to add.
Okay.
I'm going to come in, I'm going to short a little bit more, see if I could trade out of it and see how we last today, because yesterday we were up most of the day. We started to fail. I don't think this China headline is really that good. They're trying to orchestrate a soft landing. Who knows how they handle it? You also have the banks that were downgraded, a lot of them, so they're trying to absorb that. So I'm going to watch the banks, and if the banks can't hold up today, I think the futures come in, and I think this market will sell off on this day 3.
Well, let's go to the banks then. As you brought up the sector, they got hit last night after the downgrade, but then today you said in futures that they're kind of holding up. So I wonder if this is sort of a relief rally here. We knew the S&P was going to be downgrading the banks. Now the news is out there. It wasn't as terrible. We're looking at 1 notch. I read in the paper it's like, oh, 1 notch. That's not so bad. Is that what we're seeing?
Yeah, well, at this point, the banks have been so battered and bruised. So it's actually positive to see that they can go up on a downgrade, but they've been so beaten up that you can't really read too much into it. If you look at the chart of the XLF, you will see that this group is trying to hold in there. It has this little mini range. I guess if it starts to get above the high here of 12.25, you could see a move back to 12.50. And if you're long these banks, just be long versus this mini low here around 11.73.
And is there one bank you need to avoid, say Bank of America, because that did have its short-term credit rating downgraded, which could hurt short-term funding needs? Well,
yesterday it went below that 5.13, and it tried to test the $5. So psychologically, the market's looking at Bank of America. If we start to get below 5 and it cascades lower, I think that it'll be hard for the market to hold up. But the market's trying to ignore the banks. They're trying to isolate the banks. But anytime it gets extreme, they pay attention. So make sure that Bank of America holds above that 5 to 5.13 area.
All right, so that's banks on one side. Let's go to one sector that is doing well. That's oil, still trading around $100 a barrel. I was speaking with a trader yesterday at the NYMEX who said, you know what? It's going to keep going higher. The bulls are in charge. The guys who have short positions on are getting really freaked out. They're going to cover. We're going to see a rally. But towards the end of the year, we're going to see a sell-off, probably 98, 92. Would you be playing the OIHs for this kind of strategy right now?
Well, yesterday the OIHs had some strength, and as a trader you look for relative strength, but then at the end of the day it failed with the rest of the market, which makes it a little frustrating. But overall there's a pattern that's developing that it's still long off, but if you take a quick look here, you'll see the OIHs. Some are saying that you see a little bit of an inverted head and shoulders,
right.
A reverse head and shoulders, which could be bullish. So if this is the left shoulder, this is the head, it seems as if the market's trying to develop a right shoulder. So if we do take care of European problems, if the market or Washington comes up with some kind of conclusions, you see a small micro level around 120. But if this is the low of this recent move and it works higher, you're going to see a big macro, very, very, very bullish pattern that could develop, but it's a long way off. I'm trying to just put it out there early on.
All right, good stuff, Scott. I appreciate that. Okay, so if you want to know more about oil services and energy, as well as gold, we're going to be talking about that on the entire morning call, so check it out on the street.